Great, welcome to the pre-market overview this morning. Today is September 23rd, 2020. Happy Wednesday, guys. I hope the markets are treating you well so far. So what we're going to go through today is our newsletter. So if you go to newsletter@tradewithufos.com, or if you email us newsletter@tradewithufos.com, then we will put you on the subscription list so that you can get the document I'm about to go through for yourself every day, Monday to Friday. The document goes through 4 of the major markets in the world, and we talk about where we think the markets are going, where they might change direction, news and volatility as well. So a lot is covered in that document, hence why we spend 15-20 minutes in the mornings just explaining what's behind it, how we use that technology, how we came to those conclusions. For those that may not know, my name is Becky. You can email me, becky@tradewithufos.com, or it's normally better to email the support team, support@tradewithufos.com. So if you have any questions about anything I covered today, then you can go and email either one of us. Okay, so for those that are joining us from within the Tradewith channel, today is Wednesday, so you have futures at 9 a.m. and options at 1 p.m. Eastern. Also at 4:15 p.m. Eastern, you'll have the session with Boyan looking at the after hours review, looking at what did happen. Tuesdays and Thursdays are stocks and investing days, and then sharpening sessions over the weekend. We're just going to go into methodology, concepts, reinforcing ideas, and psychology as well. In terms of upcoming live courses, and this is for people that are already part of the channel or not already part of the channel, people that might think, I want to learn how to apply that methodology to futures, or I don't understand how stocks work, I want to learn that, or how do I build a trade plan? How do I backtest it? How do I manage my psychology? These are the courses that we do. So the next one is futures, September 26th to October 2nd. That's starting this Saturday, 10:30 a.m. Eastern. After that, we have stocks, psychology, backtesting, and trading plans. So those are the courses that we have upcoming. So you can go to the website to learn more about them. I'll show you in a second how you can do that. Firstly, I'm going to put the disclaimer on the board. For some reason, that disclaimer is being very slow with the way that it's building out. So that will take a very long time. So instead, I'm going to suggest to you guys that you go to www.youcantrade.com and you can get additional disclosure information on there. In a nutshell, the disclosure information is telling you that there is a risk involved in trading, of course, and that you need to be aware of that. It is your choice ultimately what trades you place and what risk you put on them, what capital you use. We're here to help, but it's educational investment content and ideas, demonstrations. It's not trading advice. If you go to the website, you'll be able to get additional disclosure information on there. And in the meantime, I will figure out why the slide isn't working so well. Okay, so just a show of what we do and how you can get to it. So you can start your free trial for the channel. Go to the website, youcantrade.com, and then choose the Tradewith channel. You've got a free trial. You can also schedule a call if you'd like to talk to somebody about things before you enroll for anything or subscribe. You can browse courses as well. If you click on the button, then it will open up a page that will show you the different courses that we do. Futures, stocks, psychology, backtesting a plan, and building a plan. If you're to click on any one of them, you'll get some information about it. And again, you can schedule a call as well if you would like to talk to us about it in more depth. If you click on that button, you will just need to fill in your name and email address and the date and time that you would like to have this call. Now, the person that you have the call with, his name is Dave. He has been a trader for about 10, 12 years. So he's a trading expert, and he'll also be able to help you figure out which markets might work better for you and therefore what might work for you. You can put in questions in advance if you'd like us to be more prepared, and then you'll get a pop-up to tell you that that's done, and you'll get a link through in your email with a link through to the meeting. Just a reminder, we have an app on the App Store. It's the You Can Trade app. So if you go to the App Store and search for us, you'll see us. It's not on Android at the moment, but if you do have an Apple product and want to follow us mobily, then you can do it like that. Okay, so that's everything. Just close out. That's everything on there. So let's have a look at the newsletter. So that's what we have here on the right-hand side. You'll see that we go through 4 of the major markets in the world. We have the S&P, which is the top US 500 stocks. We have oil and gold, both major commodities, and the euro, which is obviously a very major currency. Now, all of these markets have a lot of volume through them, a lot of trades move through these markets. So even if you don't trade these markets directly, I'm sure a lot of what you trade will at least be impacted by or correlated to these 4 markets. Now, you might notice as well that we go through a daily time frame on each of these charts, on each of these markets, Of course, different things happen on different time frames, but the daily does seem to be something that at least most people are using, whether they're long-term investing or short-term trading. The daily chart does seem to come into their analysis, so hopefully that helps. Now for each market, we're going to go through a variety of concepts. The first thing is climate. What we mean by climate is essentially trend. In which direction is that market already moving? Are we in an upwards trend or a downwards trend? But more importantly, what are the probabilities associated with that? That's what the climate is telling us. We use our auto climate app to show us this, and it's shown at the bottom of the chart here. I'll show you an example per market, but just to explain what climate is now. Ignore the lines for now, we're just focusing on the color and thickness of the dots. Now, the Auto Climate app will show us three separate things. It could show us a thick blue dot. That would tell us that we're in a confirmed upwards climate. We would have probabilities to the upside. We could see a thick red dot. That tells us we're in a confirmed downwards climate, probabilities to the downside. Or it could show us a thin dot of either color. The color still tells us the direction, blue is up, red is down, but the fact that the dot is thin, that's the Auto Climate app way of telling us you have less probabilities, less statistical advantage. So what we're doing here is we're using technology to analyze market data for us and give us what's more probable and more likely to happen. If we don't have probabilities or as much probabilities, we tend to do nothing. So again, Auto Climate app will tell us that in the form of a thin dot. So we're going to look at climate per market. We also want to understand propagating. Propagating essentially means how long can we expect that climate to continue? So if we're in an upwards climate, how long can we expect it to keep going up for? If we're in a downwards climate, how long can we expect it to keep going down for? We get that expectation based on what usually happens in these markets. And that's what we see here on the right-hand side. These numbers here refer to how long that market would usually go in that direction for in terms of number of candles. Whatever that number is, I'm going to round it up. So whatever the decimal place is, I'm going to round it up, essentially add 1 to each of those numbers. So on the right-hand side is what normally happens, and on the left-hand side is how many candles we've been going in that direction so far already. So from those two numbers, we can get an idea of if we can expect it to continue going in that direction, or if we're more likely to see a change in market direction. Now, the last thing what we want to understand is nearest UFOs. UFO stands for unfilled order. What that means is where we expect there to be buy orders that could push a market upwards or sell orders that could push a market downwards. And we use our Auto UFO app, once again, using technology to analyze market data for us and show us where those orders are most likely to be on a chart and show us visually. So if they are a stack of buy orders that could push price upwards, they're highlighted here as a green UFO. If it's a stack of sell orders that could push price downwards, they're highlighted as a red UFO. So again, we are using technology in both cases here to show us what's more likely to happen in terms of market direction and where price might be likely to change direction. We also want to understand per market volatility. Volatility means how fast we expect markets to move or how far we expect them to move within given periods of time. So we look at the current implied volatility numbers, and you'll see here, each of these are a percentage. What those percentages refer to is how far we expect price to move up or down in 1 year as a percentage of its current value. So again, it's the annualized number, what we expect in a year up or down as a percentage. Now, from that, we can figure out, if we reverse engineer it, what that means in terms of expected movement up or down in 1 day, up or down in 1 week, and up or down in 1 month. So we'll come through and look at these again per market. I'll give you the figures for each of them. Then we'll come down and look at news that we need to be aware of. So lots to cover. We're going to start with the S&P. We're looking at SPX.X. That's the symbol on TradeStation for the index of that top 500 US stocks. So in this example, we have thick red dot, confirmed downwards climate, probability to the downside. Usually, the S&P would go down for 4 candles, and we're on candle number 4. So we've come to the end of what usually happens in this market in terms of a move to the downside. So that would mean that we have more probabilities of the market changing direction. So just because something is probable, though, doesn't mean it's definite. Of course, we've seen markets go past what normally happens. Of course, we see things fall outside of the statistical probabilities. But just bear in mind that at the moment with the S&P, we kind of have two forces going against each other a little bit there, in the sense that we have a confirmed downwards climate, probabilities to the downside in terms of the climate and the strength of the climate, but we have come to the end of what usually happens with that. So we have less probabilities of it continuing. In terms of orders, we have a stack of sell orders just above us, which it looks like price is coming towards at the moment. That's 3346.86 to 3375.17. Closest stack of buy orders, 2955.45 to 2933.59. So overall probabilities to the downside here, we're much closer to sell orders, which are likely to push us down. We have a confirmed downwards climate, so probabilities to the downside. But bear in mind, we are lacking probabilities of a continuous move to the downside. So when it comes to volatility, we see that we expect a movement up or down in 1 year of 26.29%. which means in a day, we'd expect movement up or down of 0.55 points, in a week, up or down of 1.21 points, and in a month, up or down of 2.52 points. So that's the S&P. Let's move on to the next market, which will be oil. At CL, that's the continuous futures contract there for oil. I'm just going to move price a bit so we see what we need to see. We have, once again, a thick red dot, confirmed downwards climate probabilities to the downside. Usually, oil would go down for 7 candles, and we're on candle number 2. So we also have probability of a continuous move to the downside. In terms of orders, they're quite close either side. We're kind of nestled in between sell and buy orders at the moment. Closest stack of sell orders, 40.44 to 41.72, and closest stack of buy orders, 38.05 to 36.92. So we are in between them at the moment, obviously slightly closer to the sell orders, just within those sell orders at the moment. But again, I would say overall probabilities to the downside with oil. We have a confirmed downwards climate, probabilities and strength to the downside, probabilities of it continuing, and sell orders just above us. The buy orders just below us might get in the way of that move, so be aware of that. But again, overall probabilities to the downside. In terms of volatility, we see that we would expect a movement up or down in 1 year of 41.28%, which means in 1 day, a movement up or down of 1.04 points. In a week, an expected move up or down of 2.29 points, and in a month, up or down of 4.76 points. So that's oil. Let's look at gold. That's the next market. At GC, once again, continuous futures contract there for gold. So we have a thick red dot again. There's a very large arrow there. Thick red dot again, confirmed downwards climate probabilities to the downside. Usually gold goes down for 3 candles, and we're on candle number 2. So we do still have probability of a continuous move to the downside, at least for another day or so. In terms of orders, we have sell orders reasonable distance above us, 2039.7 to 2060.8. Buy orders closer below us there at 1836.7 to 1825.9. Again, I would say it's unlikely that we would hit those buy orders today, just based on the normal movement in these markets. That's not to say it can't happen, but overall there, we would say probabilities to the downside. Again, confirmed downwards climate, strength to the downside, probabilities of a continuation, and no buy orders close enough that could get in the way. In terms of volatility, we would expect a movement up or down in 1 year on gold of 21.63%, which means in 1 day, up or down of 25.8 points, in a week, up or down of 56.9 points, and in a month, up or down of 118.4 points. So that's gold. Let's look at the last market, euro versus the US dollar, spot forex currency pair there. Okay, I'm just going to move it so we see all the numbers. There we go. So we have a thick red dot again, confirmed downwards climate probability to the downside. Usually, the euro would go down for 4 candles, and we're on candle number 2. So halfway through a normal move to the downside. So again, probabilities of a continuous move there to the downside based on what usually happens. Stack of sell orders has just appeared above us, 1.1772 to 1.1900. Again, I've just rounded that where it needs to be. Then we have many stacks of buy orders below us, so lots of buy orders that could get in the way of our movement down. The closest one here is 1.1597 to 1.1502. 1.1507. Again, I've just rounded that to where it needs to be with the pip. So again, with the euro, we have more probabilities to the downside. We have confirmed downwards climate, strength to the downside, probability of a continuation to the downside, at least for another day or 2. However, we do have many buy orders that could stop us. So overall probabilities to the downside, but be aware of those buy orders in the way. Now, again, just because things are probable does not mean they're definite. So this doesn't mean that this is 100% going to happen. It just means it's more likely to. We are using technology and market data to analyze it for us, tell us what is more likely to happen, tell us what is more probable to happen, so it's easier for us to make decisions. But of course, we do need to still manage our risk just in case we are wrong. That can happen. So in terms of volatility, we expect movement up or down in 1 year of 7.73%, which means in 1 day, movement up or down of 57 pips, in a week, up or down of 126 pips, and in a month, up or down of 261 pips. So again, volatility gives us an idea of the movement we're likely to see within these given periods of time, either up or down. The climate and the propagating will tell us in which direction we are most likely to see that movement happen. And then the propagating, if we've come to the end of it, plus nearest UFOs, will give us an idea of where we might be likely to see a change in direction, a change in market movement. So that's everything in terms of direct forces today. Direct forces literally means buy orders and sell orders. Those are the most direct forces that we have to move price up or down, buying and selling. The UFOs are highlighting for us those pure buy and sell orders. But of course, there can be different reasons as to why people are buying and selling. So we do need to understand indirect forces too. So we're going to take a look at the newsletter in a little bit more depth here and come down and look at news that may affect us. This is an indirect force. So we go to fxstreet.com/economic-calendar. We look at high impact news and US markets. So of course you can go to that website and you can change the filters, see what you want to see that might be slightly different. In terms of this week, we had news yesterday, Monday and yesterday. Today's obviously Wednesday, September 23rd. So today we again have a Fed Chair Powell testifying. You can read the speech once it comes out. It will come out today at 2 p.m. Eastern. So again, just bear in mind, we don't necessarily act on the news. It's an indirect force. The buy orders and sell orders themselves are what move price, but it may induce more orders into the markets or introduce more orders into the markets. It may cause people to cancel their orders too. So be aware of that and use it in your trade plan however you see fit, but just be aware, high impact news coming out 2 o'clock today, Eastern time. Okay, so that's everything in terms of the newsletter today, guys. If you would like to join us in our sessions, futures, options, stocks, investing, psychology, sharpening, methodology, reinforcement, all of those things, you can join us at tradewithufos.com/you-can-trade. It's a monthly subscription. Again, I get there are many places to learn how to trade. You might be unsure as to what suits you better. So you can try us out for a couple of weeks, free 14-day access, so that you can see if it really works for you, if the way we do things suit you or not. If not, no problem, cancel the subscription. If so, then at least you've had a good couple of weeks to really know that it suits you before you move forward with the subscription. In terms of classes, again, the classes are for people that want to be in the channel or not. It's kind of a separate thing. For those that may want to learn how to apply this methodology to futures, that's the next class we have. So tradewithufos.com/futures live. That starts this Saturday, live class where you can join us and ask us questions and make the most of our time. We do have a buy one, get one free situation. Register for any course and get an additional course for free. The second one needs to be of equal or lesser value than the first one. So go to the website, see what courses we do, see what make the most sense to you, and put them together in such a way where you make the most of that deal. If you have questions about anything, not just courses or subscription, but technology or trading questions, we're always happy to help. Email us support@tradewithufos.com. Otherwise, we'll see you in the sessions later on today. If you're joining us from within Tradewith, that will be futures, options, and then the after hours review. Otherwise, I will see you tomorrow morning once again for the pre-market overview for tomorrow. Hope the markets treat you well today. Hope you have a good day, and I will see you in the morning. Take care. Bye-bye.